So after I did my video on Affirm, it was like 2 months ago, I actually said that Affirm is not a buy. It had a lot of issues, and I kind of joked in the comment. I said it's a $50 stock. Well, now Affirm is officially a $50 stock, and I actually had put options on the stock. I was short on it, and in this video, I'm gonna give you a kind of a quick update on why I was short on Affirm, and if now I think it's a buy, as you guys are asking me about it, because Jeremy from Financial Education actually bought it. So I'm gonna focus on the risks and the things that made me short the stock, and I actually now sold my short position. It was like at least a week and a half ago. So I'm gonna share those things with you guys so you know the risk, and I think you're really gonna enjoy it. The first risk is actually the industry itself. I've been critical on this industry. I think it's really overhyped since, Affirm started getting more popular, and then Square acquired Afterpay, and I've been critical that they pay $29 billion for Afterpay, which is not really worth it. There's no moat in this industry at all. But this is not really the reason I was short on the stock. The main reason I was short on the stock is if you look at the loan held for investment by ITACS score. This is kind of their own score. It's not really a credit score. It's kind of their own made-up scores they made for them to kind of get more loans. Okay, let me show you this. This is the total percentage of the kind of the customers they have, what kind of scores they have in ITACS score. First you have the 96 plus. 96 plus is kind of the best in terms of Affirm standard. Okay, now you can see the trend: 77%, 75, 71, 66, 60. It's 57% only. So this is the highest quality customers at only 57%. Now go down a little bit and look at no score. So if you have no score, they actually give you a loan, which is beyond madness for me, and it just really made me critical of the stock. Look at the trend: 2%, 2%, 5%, 5%, 7%, now 8%. 8% of all the loans the Affirm actually issues for people that have no score. Can you imagine that? Look at the best of the best in them, 96 plus, from 63% to 57%. This is their highest quality customers. And what is that leading to? It's leading to massive loan delinquencies. I don't have the latest data. This is the Q2 for them. I believe, yeah, it's 6/3/2021. If you look, this is 2.2% in the orange. This is 2.2% of the people. They are around 29 days past due on their payment. 0.9% here, they're around 60 days late past due on their payment. All the way up on the top, it's actually more than 120 days late on their payment. These people are never, ever, ever gonna pay back Affirm, most likely, and Affirm is gonna have to spend a lot of money, even more than the money that they owe Affirm, for them to get the money back. And Affirm doesn't charge a fee anyway, so there's no late payment fee. Why would you even pay back? And sometimes it's even 0% interest. So a lot of lower quality customers are going with Affirm. And as the stimulus checks are expiring and we have more inflation, these people cannot pay back, and they will likely default on those loans, and then Affirm is going to have to take the pain. Affirm is still not making any money despite everything they have. One of the biggest risks also is the share dilution. Look at the shares outstanding. They've been going parabolic in the past, couple of quarters, over 210 million shares right now, and this is not really going to end anytime soon. They have a deal with Amazon, a huge deal kind of to buy now, pay later on Amazon, but it's going to be a costly deal with over 22 million shares that Affirm offered to Amazon. This for me leads that Affirm is hungry for market share because there's no moat. There's Affirm, there's Afterpay, there's PayPal, which I really prefer PayPal in terms of the play because they have their own kind of websites. They don't have these kind of frenzy websites that they pay $29 billion for, so I prefer PayPal over those things. Now, in terms of those kind of shares issuance, they're going to be spread out till 2024 and then to 2028, but it's still more share dilution on the way. So for me, really, after Affirm went down so much, around $54, I don't really think it's still a buy. To me, after everything I've seen from Affirm, after the worst kind of numbers they put up right now, I personally think it's around a $30, $35 stock. Now, if you're a very long-term investor, you want to buy a little bit now, it's good. But don't really FOMO into Affirm. Think you're getting a good deal because the stock is still expensive on a relative basis in an industry where there's no moat, there's no kind of competitive advantage, there's nothing. Anybody can enter the space and anybody can make money on it. So I don't have anything against the companies, the stock, or whatever. All I'm trying to say, I'm trying to highlight the risk for you as an investor to consider those risks and see if you want to pay that kind of multiple for Affirm, or if you want to buy it when there's blood on the street. This is your choice. So I hope you enjoyed this video. If you liked it, please press like and consider subscribing. I hope to see you in another one.